Hey y'all, what's good? It's AM Trades. Back with day 6, I believe, of the nothing to 1 million and funded by the end of the year. And today is a no news Monday. It is May 6th, and we are going to be doing a trade recap as well as, kind of my thoughts going into the day and my analysis. So we took one trade today, one loss, and since last week, I've changed my trading plan, and I'm limiting the number of trades that I am allowed to take on a no news Monday is one. So I'm out of the market for the day, and that's it. And we lost, I think, less than 1% because I adjusted my stops properly, but we will go over that in a moment. But yeah, so just a losing day, whatever. On to the next. And yeah, let's get into the charts, man. So here we can see we're going to start on the hourly on both. And of course, what I'm looking for when I go into a day is I'm looking for an SMT. Okay, so a high time frame SMT or a low time frame SMT even, to kind of get my directional bias for the day, because that is when institutional order flow will show its hand. So here, what I saw was we came and tapped into this hourly order block here on the NASDAQ, while the S&P was reacting into this hourly fair value gap. Okay, so we saw this hourly fair value gap, and this is the equivalent order block to what the NASDAQ was reacting to, right down here, which means that we had a bearish SMT divergence. Okay, so NASDAQ was keeping that high untouched, while the S&P took it as liquidity and was reacting into this bearish fair value gap. So I wanted to see moves to the downside, as well as if we look on the 4-hour, we are within this 4-hour order block, and we are also in bearish order flow. So I wanted to see us come back down, right? At least to sweep some 15-minute liquidity before we saw moves back to the upside. So that never ended up happening, which is, kind of congruent with our loss. However, that was our directional bias, so we were bearish for the day. And then if we come down to the 15-minute, we can see that we had market open. We manipulated upwards, and then at market open, we actually had a bullish S&T divergence on the 15-minute. So see these highs here, the second green line, these lows, sorry. So the NASDAQ never ended up sweeping them. However, the S&P 500 did end up sweeping them. So, oh no, sorry, it's the opposite. So the NASDAQ ended up taking them while the S&P 500 did not. And so that creates a bullish S&T divergence, which I thought was only going to come to develop to kind of fill in this hourly fair value gap, and then that we'd still see moves to the downside. However, we can see that we just kind of chopped around for the first couple hours. And then now if we go on the 5-minute and the 1-minute, we can see that we had, okay, so I was looking for the macro, so our 952.10.10 macro. Here we can see that we had our manipulation. So I wanted this to be the high of like the day, pretty much the high of the day, or at least the high of the New York session, right? And so I was looking to short off of any kind of PD array that presented itself, and I ended up shorting off of this bearish 1-minute for value gap for an entry. And then I was targeting this first 5-minute low as my first take profit. And actually, I like targeting these lows. So you can see we have a bullish for value gap here, but I like targeting the low of the first candle in the sequence of making a for value gap, because there are usually lots of liquidity in that area, and that's where price will draw towards. Okay. So that's what I was looking for. And we can see that we had a nice reaction to the downside off of this 1-minute for value gap, and then we just started chopping around, no news Monday kind of price action. Okay. And I expected it to be a little better. The longer I hold my trades before take profit, the more likely they are to hit stop loss. Just that's how my trading kind of data has panned out in the last couple months. And so we saw this chopping around, whatever, and then we formed this 15-minute S&T divergence here. And so as soon as I saw this 15-minute S&T divergence to the downside, I was like, okay, yeah, I don't want to see price come back to this area. If price comes back to this area, see we swept this high here, and then on the NASDAQ, it was left as liquidity. As soon as this happened, I was like, as soon as price sits here, I want to be out of the trade, because that will invalidate this 15-minute S&T divergence, and I will no longer want to be in the trade, okay? So I moved all of my stop losses on every single account to this high, and then we can see that we came down again. We almost hit our take profit. We didn't. And then we saw a move to the upside, and we took us out here. So this was about $5,000. So $5,000 of loss on our usual size of 7,000. Oops. 5,000. That means it was a 0.7% loss on kind of across my entire capital. And right now I'm managing 700,000, kind of on our way to 1 million. So yeah, that was our trade recap for today. We You can see that, yeah. I mean, I probably should have recognized that these bad conditions and then just gotten out at break even. However, I did follow my trading plan and I am happy that I did so. We can see that price did end up wicking us out, and then it created another S&T divergence here, an hourly one, and then came to this level. See what I mean? This level of, and then it also had a no wick candle, which are also very high confluence areas of liquidity. So you can see price came and tapped directly into that to take that. But also this bottom of the Fair Value Gap where I had my initial take profit, it came down and got hit, and then I would have been stopped at a break even if I had held. However, even if I had held, it would have stopped me out at full size for a negative 1% loss. So with that being said, that's it for today. We also have no news tomorrow either. If we look at this week, yeah, no news on Tuesday. And then Wednesday, we just have bond auctions and then unemployment claims. So for the rest of the week, it's relatively low news. However, I really wanted to see nice price action this Monday because usually the week after NFP and FOMC, there is really good price action because everything is kind of balanced and there's less tension leading up to news and less want for the market to consolidate because we already had our high impact news the week before and the new month is already open now, right? So the new month will always be a little bit choppy not only due to FOMC and NFP, but also just because that's how time and price kind of go together, right? So quarterly theory. Yeah, but with that being said, thank you guys. I'll see you guys tomorrow. And yeah, another loss today, but we move it and we keep it pushing, man.